How do local authorities determine property tax bill calculations? In today's fast-paced world, understanding how local authorities calculate property tax bills is more important than ever. With property values fluctuating and budgets tightening, many homeowners are searching for clarity. So, how do these calculations actually work? Local authorities determine property tax bills by multiplying the assessed value of a property by the applicable tax rate set by the municipal government. The process begins with property assessment. Local assessors evaluate properties to determine their value, which is the foundation for tax calculations. There are different methods used for assessment. One common approach is the comparative method. This involves comparing properties to similar ones that have recently sold in the area. Adjustments are made for differences like size or condition to estimate fair market value. Another method is the unit area method. Here, taxes are calculated based on the property's built-up area multiplied by a fixed rate per unit area, such as per square foot or square meter. This method is straightforward and is often used in certain cities. The capital value method is also utilized. In this case, taxes are based on the property's market or declared capital value as determined by government-notified rates. This method links tax to market values but can lead to discrepancies if valuations are outdated. Once properties are assessed, municipalities set their tax rates. This typically happens annually as local governments establish budgets that cover public services like police and fire departments. To meet budget requirements, local authorities determine the total revenue needed from property taxes. The tax rate, often referred to as the millage rate, is then adjusted to generate the required revenue. In areas with higher average property values, the tax rate may be lower, while areas with lower property values might have higher rates. The general formula for calculating property tax is straightforward: the assessed value multiplied by the tax rate. For methods like the unit area method, it may involve built-up area multiplied by a unit rate and then by the tax rate. Reassessments occur periodically to reflected changes in market conditions or property conditions. For example, in Davidson County, Tennessee, property assessments are updated every few years based on market conditions. Property owners receive assessment notices and can appeal if they believe their property value is incorrect. This process helps ensure fairness in taxation as market values change. Overall, local authorities determine property tax bills through a systematic approach that balances municipal revenue needs with property market conditions. Understanding these calculations can help homeowners better navigate their financial responsibilities.